The mortgage application rate was down significantly again this week. That's primarily due to mortgage rates, so they say, mortgage rates going up. I mean, I find it hard to believe, but I know it is probably true that people aren't getting mortgages now. All of a sudden, they stopped over, a few hundredth points. It's really seven basis points difference in a 30-year mortgage. I mean, it's insignificant, but people are so, it is mind-boggling to me. I mean, we are at historically low mortgage rates. You get a mortgage right now, 30-year mortgage for 3.10%. And that is lower than your grandfather got for his first house from an interest rate perspective. I mean, it is crazy. And people have just gotten so, the whole thing started in 2008, and we raised up a generation from 2008 till now of home buyers that just expect 3% mortgages. It is ridiculous because the odds of this holding for an indefinite period of time is slim. So what's going to happen? Nobody's going to buy a house. Nobody is going to get a mortgage because they're afraid of a 3% mortgage or a little bit higher than a 3% mortgage. It's insane. But anyway, that's where we are right now. And mortgage volume application for mortgages fell about 1.1%. That's a pretty significant move for 1 week. And that's what it has fallen. And they're blaming the very slight increase in mortgages. And those rates that I gave you are obviously with mortgages with a 20% down payment. We are not in an environment to do a down payment of anything less than 20%. You ought to be aware of that. It is not beyond the realm of possibility that you could buy a house today, forget what the mortgage rate is, but you could buy a house today and the average mortgage is $548,250. So you could buy a house for $548,000, and it's not beyond the realm of possibility for it to be lower than that in 2 years, lower than 20%, meaning you're now upside down on your mortgage, even if you put 20% down. So the idea of mortgages being purchased with a 2%, 3%, 10% down is crazy. It is not a good. Now, if you're buying a house that you're going to sell in a couple years, then it doesn't much matter other than you're still going to be upside down. And I remember, as a matter of fact, my oldest daughter and her husband, for their first house, they were upside down. They actually had to write a check at settlement to get out of their house. And you remember those days. And, so hopefully we've learned something and we understand you don't want that to happen. Now, if it's your forever home, you're buying a home that you're going to raise your children in and you don't see any possibility of moving or selling or growing out of the home, then yes, I think that's a very different situation. But pretty amazing that we see a mortgage rate increase going from, 3.03%, which is amazing, 3.03% to 3.10%. And people are pulling back and not buying. I mean, it's insane. And let me tell you, for all those people that want to buy, but they think, well, I'm not going to buy, I'm going to wait for that 0.7%, you may never see it. You may never see it in inflation. As a matter of fact, 3.10% mortgage may be the cheapest mortgage we see for the next 20 years. It may not be, but it might be. So it is really ridiculous. For if you're ready to buy, you've got your 20% down, the home you want to buy, and you're pulling away for that, that is a huge mistake. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.